Before understanding what petty cash is, it must be known that most companies make purchases and cash transactions using authorized electronic transfers and double-signed checks. However, these methods can be extremely cumbersome and time-consuming when they must be carried out for every purchase. That is why the petty cash fund was created, to make minor transactions more efficient, where an assigned custodian administers the fund. Establishing the fund. The fund is established through cashing the initial check, illustrated in the journal entry below. The day that the check is cashed is the day of the journal entry. The petty cash amount is debited to establish the fund, and cash is credited to decrease the cash account. The size of the petty cash fund is dependent on the company. In this case, the petty cash fund is $50. $50 is essentially then moved from the cash account to the petty cash account, using the fund. To use the fund, no electronic cash transfers, checks, or journal entries are required, as it's only used for minor purchases. Employees may utilize the fund in two ways. The first option is to simply use cash from the fund to make payments. In this case, $10 is taken from the petty cash fund to buy office supplies. Alternatively, a purchase may be made, for example, buying food staples for the office, where a receipt is kept and employees receive reimbursement from the fund. However, as there are no journal entries, a transaction history must still be maintained, where receipts must be kept for every purchase. When the fund gets low, it must be replenished and brought back to the original amount. In order to do this, the remaining cash in the fund is counted. In this example, there is $12 remaining. The receipts of items bought using petty cash are also added together. In this case, miscellaneous, office supply, and food receipts total to $38 of expenses. The petty cash fund replenishment report is then created to determine the amount that needs to be replenished. If the total expenses is equal to the cash that needs to be replenished, a check is issued for the amount. This transaction is illustrated with a journal entry. The date is the date of replenishment. The receipts, amounts, and their corresponding expenses are debited, whilst the cash required to replenish the fund is credited. However, the cash needed to replenish the fund may not always match the receipts, and thus requires the cash over and short account. In this case, $2 is missing from the petty cash fund due to an error in change, and is reflected in the replenishment report, where the cash requested and expenses do not match. This results in a change in the journal entry. An additional debit of the missing $2 is required. Alternatively, if there is an additional $2 in the petty cash account, the cash over and short account may also be credited. The fund is then continuously used and replenished by the company.